me, and maybe perhaps those who are not directly participating right now, could I ask you to switch your sound off? It might help in not having the needless echo. Well, thank you for joining me. This was unplanned, and many are asking me about whether I feel the Bitcoin has bottomed or whether it's currently in a new uptrend, a new bullish trend, and at what point am I going to reconsider. Um, so hopefully I will be able to explain from my approach why I think my views are still bearish on Bitcoin. Not to say that they are right, but I think there are good reasons why I believe we haven't bottomed yet. I know many zealous bulls will probably find that very hard to believe, but I will be happy to entertain any of your views once we've covered some of the reasons behind my views. Then maybe you can provide an alternative to that, or questions, then we can go into details that might help to clarify. So let me organize by sharing the screen, and then we're ready to go. Full screen. Okay, so I'm going to drop this one down, and I'm going to be referring to Bitcoin chart.
You can close the close that.
Okay. Okay, so this chart here I think you have all seen, because I published this chart. When I published this chart, so that you all know, this particular line was slightly lower like that over here when I published it, and subsequently, because we had that price action up, I lifted it for no reason other than the fact that we are still lower high so far. And look at the RSI, and it's very clear that the RSI got higher high on the RSI. Now many can argue that in two ways. One is that this is suggesting higher momentum with this particular leg, but if this leg does not progress very strongly to the upside, then it means that we have what is called a hidden divergence. Hidden divergence, but negative because this is likely to turn back to the downside. So nothing, my analysis is not hanging on that. This is just the point of interest, is that should we, for example, today get what we are typically calling a candlestick pattern as a bearish candlestick pattern. In other words, we had a fairly strong bullish candle, and now we have potentially a topping tail candle or a topping spinning top candle. Then the next day's price action is going to be very key. If the next day's price action actually weakens, then there is a good chance that we've got another high in place, but a lower high. So in that sense, we are in a range so far. So really this low here and this high there is the upper and lower limit of the current range. So this chart could easily drop and come back to the lower end, or even make a new lower low. But as I say, my analysis is not hinging on that. Now many of our friends have mentioned about this particular trend line, and I had that trend line on my chart too, and he's saying now that is clearly breached, and I would agree, it's clearly breached. However, if that breach really significant and is suggesting that we are in a new uptrend, and let me just clarify, when I talk about an uptrend, I am talking about an uptrend which will be similar to the one that we had before. In other words, we are if we are considering an uptrend, then my understanding would be is that from this high back in November, we have finished the correction or the retracement, and therefore we have now reverted back into the uptrend, and we are going to be retesting this high, or maybe even going into the new higher high. So that to me would be an uptrend. Now many of our friends, I don't think they really mean that. You see, if this leg was going up, they call that an uptrend. So at the moment we are moving up, they call that an uptrend, and to me that's really confusing, because in an overall cycle you will find a move down and you will find retracement move up. You can't constantly be talking about, you know, a downtrend and an uptrend, because the cycle is made up of down legs and up legs. But in a downtrend, in general, we have a stronger downtrend, and retracement is not as strong in general, and it would not retrace like 100%, because if you retrace 100%, then you begin to question whether it's actually retracement or is it a new leg up. So whilst we remain within that range and we are retracing, to me that's not an uptrend, that is a retracement. And the reason why I say retracement, because retracement is supposed to end and we should then resume the previous trend. So when I say an uptrend and downtrend, I am qualifying it in a sense that an uptrend would be a trend where you expect the price to continue producing higher high and higher lows to the point where it would then retest and maybe even take out the previous all-time high. That would be a new uptrend. So if I was to say ignore everything that I know about charting and about Elliott wave and everything else, and if for example this chart went up like that, in fact what I'll do so that I don't mess up this chart is I'm going to reopen this chart, and then I can scribble on it, and my original charts that I published won't be affected that much. So this one is running flat. Okay, so load okay. Right, so on this chart now I can scribble, so it's no problem. So when we are talking about an uptrend, my expectation would be is that we should be in a very strong channel up. It doesn't matter really how steep the channel is, but it's important that it is a clear up channel, and we would be producing this kind of move. For example, I think this is the log scale, that's why it's okay. So we would be producing a straight clear up trend like that. So this, now you see the trend, you know, the channel is not really steep, and to me that is the weakest part of the chart of the movement, because, you know, look at, in contrast to this channel coming down, look at this one here. So in other words, if you were just representing the whole price action in the channel, you've got a move that's come down like that, and we are bouncing off like this. So in technical term, what would you call that? You know, I would think that that is more like a bear flag rather than a new uptrend. A new uptrend do not start off like that, generally speaking. You know, I mean, unless you have something that starts off like this and then possibly do a small retracement and then rocket up like that, then I can understand that we got a steepness of the momentum to the upside, and it has the potential then to really retest the all-time high in due course. But where it is now at the moment, I am not entirely convinced. Even forgetting Elliott wave, I'm not entirely convinced that this is really a strong uptrend so far. This move up here, that was a fairly strong one, and in contrast to that, this second leg up doesn't have the same momentum. I mean, you can look at this in any way you want, and if I was to draw a line and say this wave here and then put that on here, you can see that we are really lacking the momentum. Let me actually do something else so that we don't get too confused with the let me bring in a clean chart, and then we'll go back to the other one in a moment. You see, we sometimes get so reliant on different types of indicators. Okay, so here I'm not talking about an indicator. What I'm talking about is generally gauging the momentum. So for example, if you look at this momentum here, you put it on a high and you put it on a low. Okay, you look at that momentum, and then if I was to copy paste that one and put it on here, you can see that this coming down is not as strong but is similar. In other words, if this was the family, you could say they have a likeness in the strength of the movement to the downside. If I was to press that one on this very first drop here, the very first drop was really steep, so subsequently it looks like the momentum is dying out to the downside. So that is significant, because eventually if this momentum is dying out to the downside, chances are we would eventually form a bottom and the market would begin to go up. Question is, have we bottomed here? So in contrast, if I was to look at, say, I'll make a blue color, so if I was to put this one on this here and class that as an uptrend, and then I copy and I put it on here, you can see that maybe, without sort of really splitting hairs, maybe we have similar kind of an uptrend, but it didn't last very long. It was quite shallow. And then if I was to copy paste that and put it here, we again had similar strength of bounce, but it failed. Now compare with that, what is this here? Would you say that in any shape or form except from here? It's really lacking the momentum all the way from there. So if we were generous enough and say we'll start it off from there, so then I would say in order for this price really to follow that kind of momentum, that would indicate to me that we are possibly in a larger cycle wave up, even if it's not a full uptrend, which means that this one could go back to somewhere about 700, 900 level. Okay, but if I take this off now and say just simply compare the overall channel, then you can have several of them for each of these. So if I, for example, was to say, we have this here, and you put that, just very crudely, that's one channel. This channel is of a similar decline. So in the same way, what I would expect is this channel going up similar to the one that we've had before. So, because really if this one doesn't have the same kind of a behavior as this other one, then one wonders how are you going to ever develop a strong up leg. So say for example we had that here. Okay, so we had that there. So in the same way we've had this one here, not quite as steep, but nevertheless, say there. So are we getting anything like that on this one? This is really forgetting, look, we failed here. So we failed here, we dropped down and we moved sideways by many days, and then we seem to be picking up. So if we're going to be picking up, then it's important that that one should hold this channel here. Oh. Okay, so let's do this one. So it should hold that. Now will it or will it not? Well, only time will tell. I have no way of saying yes it will, and I have no way of saying it won't. Okay, so I would expect this uptrend really to be maintained. If it breaches that, then you can forget about this going up, no matter how much you desperately want it to go up. My view is this is just a retracement, And in reality, if I take all this off here, this is simply just checking the structure. Okay, I'm not looking for being accurate in terms of $5 and $10, because really in this kind of a chart, you know, each of these candle is a one-day candle, and there's a lot hidden in there, and you can have all sorts of patterns within that. So, you know, there will be people who will find a tradable opportunity on a 5-minute chart, on a 10-15 minute chart, or even on 1 minute chart. But really, I'm not about that. You know, I often amuse myself when I say, if you ever watch the Jungle Book, then the Baloo Bear goes to the Mowgli and he says, you know, if you're buzzing like that bee, you're working too hard. And that's my philosophy, is really, you don't want to work like a bee. No discredit to bee, but you know, you don't want to work like that. You want to try and see that for your efforts you are going to be rewarded, besides taking the risk with your hard-earned money. So if you want to be rewarded, you want to have some decent enough trend, decent enough potential in order to capture a good amount. Because I can never capture the absolute bottom, you know, consistently, that is, and I can never capture the absolute top consistently, meaning that most of us are really looking for somewhere in between. Now if that somewhere in between means that overall we're only going to get a move like that, only going to get a move, if we only going to move up there like that, and say for example that move happens to be from 750 to say 830, right? So that's $60-70. Now on a $60-70, what you have to remember is that you expect, in a move down, you expect a candle to form. That candle itself, even on a 5-minute chart, that candle itself might be like $10, you know. So you wait for the $10 candle to close, then suddenly, before you know, next candle is done that. That means, you know, you potentially missed from the bottom, you potentially missed $10-15. Likewise on the top, you might miss $10-15. Or whilst this continues higher up like that, you know, then suddenly you get a bar coming deep down back there, and you might be then scared off, thinking that, oh, this trend is not going to last very long. So you might prematurely jump out, right? And then you might get a bit of sideways, you know, so really frustrate you, and then suddenly before you know, you got that. So maybe you got $50-60-70 in a go, but were you able to stick to the trend? Were you able to stay with it? Because not knowing at this point whether we are going to get a reversal, or is it just going to be a sideway, or is it going to be just, you know, holding here and then do a short up. Now if you're trading that kind of thing on a 5-minute chart, I really do not think that you can have a fundamental overlay on it, because, you know, there are people who sometimes, I think, blowing their own trumpet, or they're trying to be too clever. No disrespect to them, but you know, in reality, could you imagine that if on a 5-minute chart, if for example I take this one down to, let's take this one down to 5 minutes, and people say, oh, consider fundamental. Okay, so I would ask them, what was the fundamental here? What was the fundamental here? What was the fundamental there? Now I'm not being cynical, but really, would a fundamental have any effect on this kind of a chart? I say no. Fundamental do not change from 5 minute to 10 minute. You know, the fundamentals don't change even over a day. So if I now go back to say like a 4-hour chart, you know, in this one, people might be able to come up and say, okay, at this particular point, fundamental was X, and that's why we had a price shoot up. So I would ask then, did that fundamental change at this point? Because then we corrected quite a bit. Is it reasonable to expect fundamental change in every swings? I'd say no. It may be that when you go over a longer term, for example, for this price to have dropped from, you know, this 700 high drop to here, there might have been fundamental actually causing that, and there might have been some developments along the way, because this high here was back in March, and then this low here was in April, so approximately 1 month. So within a 1 month, there may be some fundamentals that actually drove that swing down. But in between this swing low, this swing high, this swing low, this swing high, fundamentals have really no play, because fundamentals do not change from an hour to hour, to minute, or even from day to day necessarily. Fundamentals, I think, have implication over longer term. But even then, I am suspectful of how accurate fundamentals can replace or help you. So if you look at this one, daily chart, and I know as we went up from here, because my Bitcoin and many people try and say, you know, my first chart that I posted and I was wrong, can I also be wrong again? You know, no harm in that question being asked, because when I started following this very accurately, and you'll see one or two of my chart, earlier attempt to chart the Bitcoin, I didn't have a handle on it, I agree, but nevertheless I understood what Elliott wave were. So in Elliott wave, when you have a strong leg up like this, then a textbook idea is that you get a drop down, then you get a retracement, and you get another leg down. Okay, so generally that's the easiest form of correction. Okay, now there are some other combinations of correction, but that's the easiest form of correction. So if you get A, B, C after this long straight leg up, then it's possible for this next leg to continue higher, right? So that's what I was looking for here. But then when I realized we didn't get that, so if I just go and focus on that now, we didn't get that over here, for example. You know, we had very strong leg up, strong leg down. So at this point, you know, not knowing anything, I would be expecting a low down here and then this price to take off. We never had that. So something else is at play. As I say, that's, you know, there are other combinations. So when we were getting this leg coming down, my whole idea that as long as it stays under this trend line, chances are we are going to be coming down, producing new low. Now we broke that, and that was a puzzlement to me, because why did we break it? First of all, this coming down is not an impulsive 5-wave down. It's really two swings. It's two swings because if I take a different color, and let me change the color of that one. Right, so this one was essentially a swing from there to there, but within that we had that swing, and then we had this swing, right? So it was a puzzlement. But then I caught on that what we have here is a possible triangle. Now where do you draw the triangle from? So my idea was initially drawing a triangle. This is exactly what I tried to play with, right? I tried to play with a triangle that was actually, this is what I was expecting. Okay, so this is, in order for the triangle to look reasonable, that's what I was expecting. So what I then expected was that I had this leg up and this leg down. So what I now want is a leg up, then the leg down, and then to take off, right? So I would then expect that leg to take off like that. Now we never had this. Because we didn't have that, my triangle idea failed. So that's where I was wrong. Okay, so anybody can take it how they want. That's where I was wrong, is I was expecting this triangle. So this would have been wave A, then we would have had B, this three swing would have given me C. So we would have A, B, C, D and E. That would complete the triangle and will be going up. So I was wrong in that. So then what actually happened was that we didn't have a triangle, we had what I call a running flat. The running flat is this, right? That's how the running flat actually shapes up. Is what we had a strong leg down A. This one here was A, B and C, and that's why it's called running flat, because this one should have actually gone up. This one should have gone up. So then I get A, B and C to correct this leg, and then I would get a leg down to give me this A, minor B, minor C. So it gives you A, B and C, and it didn't happen there. So we've had a running, we had what we call a running flat. So running flat, what it happens, it actually doesn't go as far as the previous leg, and then when it comes down, it doesn't come down as far as the previous low. So we formed a low here. So in essence, when we started this leg up, even many people are saying that actually the move started from here, but it didn't. Move actually started off from here. This is the end of correction. So if I put my horizontal line, that's where the move started off, from there, right? So it's true, I was expecting a price to drop back to a lower, somewhere about 80 and 60 maybe, and then we would have gone long, but it didn't. It actually took off from here. So when it took off from there, I had no reason now to expect another leg down. From there on, we were on the long side, okay? And then you'll see we basically had a parabolic move, but within that we had a 5 cycle up. So we had this cycle up here as 1, this as 2, and then we need another 5 up to here. So we've got, for example, that this is 1, 2, 3, 4 and 5. So that gave me leg 3. Then we had a small correction, leg 4, and then we had this final one up to give me 5 wave up, right? So once we had a 5 wave, then we should have, as you know, in a textbook style, we should have A, B and C. And ever since this low, and in fact even up here, many were arguing with me and saying, you don't understand Bitcoin, fundamentals are strong. And we know what the fundamentals were. All the major news development actually took place here. You know, the what you call in the US, the forget the actual name, but there was the some congressional or some committee hearing in US, and there were other things, and a lot of the experts from the Bitcoin world came to give their testimony, etc. So the price actually took off, and actually took off. So people might say that's fundamental, and it could be fundamental, but I would also say that whatever happened here did not particularly change there. Even the price went up that high, the fundamental did not really change very much. But what happened was people got exuberant and they got carried away with all this positive news, and the clever money knew that on the positive news they can drive this market really up, get everybody long, and then abandon them, right? And that's why we had this collapse, because how else could you have a price move up like that and then all the fundamental mark the top? As soon as the congressional hearing or whatever hearing, Senate hearing, yeah, thank you, as soon as the Senate hearing was over, we had this. So why? None of the Senate hearing actually made Bitcoin an outlaw. There were no real negative comments. You know, so why suddenly a price raised up from here, from the level of 200 odd, or maybe even from here 100 odd, and it went up to there 10 times as much, and then at the end of the Senate hearing, you know, we had this. Now people might say, oh, maybe, you know, China was playing the muscle and there were negative news about China and all that kind of thing. But you know, China news might have caused this, but was the China not involved in any of this here? So what suddenly changed in China? You know, for within a space of a month or two, what changed? I mean, this was November, this was December. Within 1 month, what changed so that this such a bullish, very positive, you know, undisputed fundamental driving the price up 10 times caused it to crash back to here? Why? You know, at what level in this here you say fundamental is causing the price to go up, and at what level do you say fundamental has really now no relation to the price progression, and what's carrying up is a sentiment? Let me give you another example, and I can only talk about my personal experience. In UK we had, many of you might know, in UK we had Mrs. Thatcher as the Prime Minister, for many years, and very, very popular, very, very successful Prime Minister. She had almost 3 terms, and toward the latter part of term, there was a lot of discontent, and one of the area for why there was a lot of discontent, there were many others, but one of them was what they call poll tax. And the poll tax was a tax on individual people rather than the property. So if you had a house and you had, for example, 4 adults living in a house, then you would get 4 individuals having to pay a tax on head, which they levy to cover expenses for looking after the local environment and providing some basic services, roads, libraries and parks and etc., lightings, etc. So there was the poll tax, and it became so unpopular that it caused a lot of negative sentiment, and I think, amongst many other things, I think that was one of the reasons why there was a lot of discontent, and the sentiment was such that people could not gauge exactly what it is and how long it will last. And that's the whole nature of sentiment. When the sentiment is either positive or negative, sometimes fundamental really have no relation to the sentiments. Sentiment can be so strong that at 1 minute somebody is not prepared to pay a penny or even $1 for a particular item, and if the sentiment changes, then next minute, not necessarily fundamental change, but next minute people will be willing to pay 10 times as much. You see, that's exactly what happened in the very popular tulips bubble, people call it, South Sea bubble, all of these major bubbles. When the price peaks, it's not because of the fundamental. I don't care how many times people argue. I would only accept that in a longer cycle like this one, the basic seed is fundamental, but at some point fundamental get disconnected from the reality, and the reality is more governed by people's sentiment than the actual fundamental. Fundamental do not change from day to day, fundamental do not change from week to week, fundamentals do not change from month to month. They do not. Fundamental are longer driver. Sometimes the fundamental will last you for 6 months, 12 months, year, 2 year. Those are fundamental drivers. And these shorter term swing that are month and 2 month long, fundamentals do not change. But I do accept that sometimes some fundamental event might line up with either a high or a low, or it might act as a catalyst for either propelling the market up, or if the market is already in downtrend, then catapulting the market down even further. So sometimes they can act like a catalyst, but they do not necessarily. Fundamentals at every single bar produced on here on a daily chart, fundamental had no relation to what was happening to the bar. This bar coming down, this bar going up, fundamental did not make any effect to that at all. You can go and develop your own theory, but I cannot imagine in my own head that fundamental change from day to day. Cannot. Fundamental is a longer driver. It's a driver of a larger cycle, and this cycle sometimes last for years and months, not 4 hours and 3 hours and 48 hours or 1 week. They do not change like that. So that's the reason why I have issue and I have problem in trying to say, am I taking this fundamental into my view? In the same way, you'll see my chart published when I went away on a holiday. We were going up, we were coming down, and I went away at the back end of January. So in terms of where I was when I went away, we were at approximately somewhere around here. Okay, I had no idea what the fundamentals are going to be. I had no idea, in terms of what news they're going to come out of China, or some other unscrupulous people going to, skin people who became their victim in the end. I had no idea, but what I did know was the move of the low was nothing like this here. You see, this is 5-way move up. We did not have that, and we did not have that because if you look at this one on a 4-hour chart, and this is behind my reasoning even for the current low. Okay, and then I'll explain overall why we are still in a downtrend. So let me just get to that particular, this is the 4-hour chart. Okay, so when we were looking at here, look at this mover, and there were so many people trying to argue with me, and they said, look, we had a three drive down. We were 1, 2, 3 down. Okay, my issue was that this move coming down was not a 5 wave. I need a 5 wave in order to form the low. On Elliott wave, you can have this zigzag coming down. We can call that one wave A. Then going back up, we can call this wave B. So if this is wave C, I need a 3 wave down. I mean a 5 wave down, and I did not have 5 wave. Now many who are not experienced or who have limited knowledge of Elliott wave will say to me, and actually have tried to press me to admit that this here is a wave 1, this is wave 2, this is wave 3, this is wave 4, and this is wave 5. You see, they've actually done that, right? And they are saying that you are nuts now. Even after this 5 wave, you're saying it's not low. Now the way I'm counting, it's not 5 wave, because one of the guideline of Elliott wave is wave 3 must be stronger. Stronger meaning it must have a more steep momentum to the downside, but this one does not. So if you look at this wave 1 and you take that and you put it on here, look, this one does not have the same momentum, so it cannot be wave 3. So that's first thing. Second thing is that you do a test, and the test is a trend channel. Okay, so if you do a test like that, and then you draw a trend line here. Okay, so we had this wave 1, wave 2, but this wave 3, if this was wave 3, wave 4 didn't come back and went there, then really what I should have is another trend line here to define a trend. And within a trend, if this was wave 3, it must have 5 waves. So if I then make this one say pink color, then within that I must have 5 waves. Did I have 5 waves? No, because I've got 1, 2, 3. So where is the 5th wave? I don't have a 5th wave. So if this was a wave 1, if this is wave 2, then in wave 3 I must have 5 waves, and I don't have 5 waves. So every which way I'm looking at it, I simply seem to be struggling in following the normal guidelines and the Elliott wave rules. So in some way I cannot accept that I was a 5 wave move down. What I do think this one is some kind of a complex whereby we've had this wave A, some kind of a complex wave X, and we had A, B, C. So what we really had is A, B, and C. So that gives you one cycle, right? Then we've had this retracement and another cycle. So in my way of looking at it, it's actually A, B, C down. So it's just like this one, A, B, C down, just like that, just like A, B, C down, A, B, C down, nothing more. So what we had here is this entire leg consisting of double zigzag. So that particular cycle ended here. Okay, and what it had is each leg, that is first leg, second leg, both made up of double zigzag. So then I'm happy to say that is possibly a big cycle wave A. So either cycle wave A or a W. Now you don't have to get too carried away with why I'm calling it A or a W, but just suffice to say for the time being that is A or W. Okay, meaning we are going to retrace that. So we did retrace it. When we retraced it, again many people started arguing with me and really trying to pull me to task by saying that this is a 5 wave, and again they were trying to put these waves in here. They say wave 1, wave 2, wave 3, wave 4, and wave 5, right? So it's the 5 wave is a new uptrend. Well, it's not, because first of all this wave 3 is smaller than wave 1, so, whereas the wave 3 is supposed to be the longest, or at least not the shortest. It should at least be equal to one of the other leg, but not the shortest. Okay, so that's wave 3 out. Second thing is, look at the steepness of this bounce here. So the wave 3 should be stronger than a wave 1. So if I put that momentum here, see, this one is not taking us anywhere. So that's why I had been arguing, and you'll see at times I wasn't sure, and like everybody, who knows exactly where this thing is going to end. There's only certain guidelines you can follow. So one of the things that I did, and this is no hindsight, you can see my chart, so I'm not telling any fibs at all. I had this here, so you know, commonly 61.8% potential in the area where you can, you know, come down, a retracement end, and we can come down. We had a structural point, so all the reason for expecting a potential end. So what happened was that we had this blowout. So I was expecting a possible end of this move up here, but it went up to there, and even then I was not convinced we were in uptrend. And many people were saying to me, look, it's broken through that, broken through what you were expecting, gone up, but it actually proved to be a false break. It didn't live very long enough, right? But the fundamental reason was that this here, oh, take that away. What I was trying to do is draw a line. So if I had this line here, okay, so if I had this line here like that, then whenever that line is finished, that's the conclusion of the trend. Now sometimes you have to be a little bit more creative, like you could draw it here, or if you're very conservative, you might want to draw it from there. Okay, but at some point that particular trend channel has broken, right? So again, I was looking at this and I said, really, what is it? This one is a trend like that, see? So we take this away, it's just a trend like that. So all we've had in here is we had a leg up, leg down, and in the first leg, look at it, look at, you know, people talk about fractal. This leg up, it got up, down, and up. So really two swings, okay? So again, we had a leg up, down, and up. Again, two swings. So we've got two swings down, we've got two swings up. So I then said to myself that, okay, this is possibly running flat. Right, and running flat, again, there's a video on that one, you can go back and have a look. Running flat, I was expecting this down leg. Running flat says that if you got this, and we also went up, you know, retracement up here. So running flat says if you got 3 wave down and a 3 wave up, this next leg should be 5 wave down. Okay, so that's a textbook general guideline, 5 wave down. Now here again, we were lacking. I tried to count this as wave 1, which is, you know, you could get away with it maybe just about. Didn't quite make it because it was the 1, 2, and 3, and where is my wave 4? So, you know, you struggle for a wave 4 because we had this funny kind of a sloping downward, you know, not really steep downtrend, but sloping downward channel, like that. Okay, so I'm thinking to myself, why am I not getting 5 wave down? Then we started coming down, but look, all of these waves are so over choppy and overlappy. In an impulsive way, they should not. So in other words, I'm now really messed up because I've had this, I'm okay up to there, I'm okay up to here, but now my 5 wave to the downside is not materializing. But I'm still in a downtrend. So even if my Elliott wave is not very easy to count, as long as I remain below that, I'm essentially in a downtrend. Within that downtrend, we know we had a bounce from 400 something, we went all the way to 700. You know, that's a strong movement, but it's still not a bullish trend. It's a retracement. That was the retracement of whatever we came down here with. So again, we did the same thing. We came down from this low, this high rather, and we retraced. So what are we doing right now? Are we in a new uptrend, or are we retracing? So those who do not agree with me, they can continue to follow their own particular analysis, and even those who do agree with me, I think they should really check it out and make sure that they're not following somebody just because somebody else said so, who might have a better knowledge. But you have to try and convince, because at the end of the day, it's your money online. I mean, if you're going to be trading based on that, it's your money online. So you do not want to then rely on somebody. And if you get it wrong, you need to then own up, because it's your failure, not because Dan V said this or somebody else said such and such, and then try and scoff at them as to what do they know. So you need to make sure that you follow what somebody is explaining, but then go over with the knowledge that you have and see whether it makes sense. Okay, so as long as we remain below that line, we're in a downtrend. So now we have breached that. Okay, so many people will start saying to me, is breached. And last week or a couple of weeks ago, there was a lot of arguments about this and about possibly log scale. So if you do a log scale, then there were many were saying, look, this one is not broken, right? In fact, if you do a log scale, you're almost probably still in, right? Almost probably. I'm not going to be sort of spending a lot of time and trying to, because I don't want to necessarily prove or disprove anything. If something is really genuine uptrend, you should not have to spend hours on end trying to look at this last minute candle and exactly where this trend line is coming and all that. See, on a log scale, look at that. Okay, over here, I think I'm reasonably accurate picking that high, connecting this high, and then coming down here, we are back into that. Okay, so are we changed? Are we not changed? My perception is we are still in a downtrend. There is another form of chart if you look at it, which is where is it? This one here. This one here. So this is the log scale chart. Okay, you can see log scale chart. And remember I was talking about channels. Well, this one is just the same kind of a channel. If you were to press that one there, no, it doesn't work. On a log scale, it doesn't work. Let me show you the chart that I wanted was the one with the point and figure chart. Where is it? Where's it gone? Here it is. Okay, so point and figure chart. Now what point and figure chart does, and in contrast to this one here, remember this movement here where price never really got anywhere, but in the process it actually spent from 28th of April to almost 20th of May, nearly 3 to 4 weeks. Yeah, nearly 4 weeks, nearly a month it spent in that range here. It didn't really go anywhere, but in a process what it's doing is traveling sideways. Now if you get a movement traveling sideways and it breaches the declining trend line, and unless it does by really significant force, you should question whether it's going to really break to the upside or not. And in the point and figure chart, lost it here, point and figure chart, you don't get this box to the up or the zero to the down unless you actually have a price traveling. So in other words, if we now range in this area for the next 1,000 years, in this area for the next 1,000 years, we just keep going up and down, up and down, up and down, we would not get, if we get no new high, we won't get another dot to the top, and if we don't get sufficient enough move to the downside, we won't get this red dot to the bottom. So you will, basically speaking, just see the green bar, or you might see red and green, but you just travel sideways, so no real movement. So sometimes when you get a sideways price action in point and figure, they're almost coming out. And you can see here, you don't have to be Einstein to actually draw a trend line there. This is a parallel line placed on here, and we broke out of that. So you can probably say, okay, take that away. So this is the main one coming down, and we haven't breached it. And in a horizontal way, see, this one is where the previous major bounce was. Okay, we came down, marginally breached it, we went back up, we came down and we rested on it, we tried to break it, and it was only finally broken. So I think that area, which is approximately 575, 580 area, because this is the box of 10, so every zero is a $10. So within a $10, you can have plus and minus $10. So basically looking for anything from 580 to probably 560 is an area for a potential resistance. Look at the RSI, only visiting to the upside for a short period, spending most of the time below the 50. Came here, bumped on the 50, drop back, we're back toward the 50. Is it going to fail or is it going to take off in terms of momentum? But in the price, on the price thing, 570 to 580 I think is significant. If I now go back to this chart we were messing about here, this trend line is still intact. If you take at the various fibs, so this is ignoring all the Elliott waves, just common technical analysis tool, right? You look at that. Wrong thing. Just bear with me a second. Okay, so what we need is fib retracement. So we know that from this high to this low, that's a full range. Okay, so maybe when we had this one, we are either completely out of this range or we are probably still within that range. If we are within that range, then the question arises, what is this retracing? Is it retracing everything from that point to that point, or is it retracing this one? Now I don't know exactly which one, but this is 61.8%. so we haven't quite made it to 61.8%, we haven't quite made it to 61.8%, and it is at about 575. Remember on the point and figure we said about 570, 575 is an area for potential resistance. So could it be that we're going to fail here? So if we're going to fail here, then does that not tell you that we are still in a downtrend and we haven't actually left the area? We're still in a downtrend, and if we fail at that level, where is it going to go to? Is it going to go to, you know, just drop down here, which it could, and then find this as a possible support zone and then rocket up? Now that's absolutely possible. I don't know whether it will do that or not, but it's quite possible. If it did that, it still would not be in a new uptrend. The reason why is because all these previous bounces are steeper than even this one is steeper than the momentum so far. So in order for this to become steeper, it means this Bitcoin has got to go almost like that to really pick up the momentum, right? So I've got to draw this here and then put that one at the top, and again it's a log scale, so it probably won't line up. Yeah, it doesn't line up on log scale, so the only way I can do that on log scale is do a channel, parallel channel. So I'm going to do this, for example, right? Got to do that. So in order for this momentum to gather up, BT has got to come down, possibly maybe in the region of about 460 or so, and this time it cannot dither. I mean, if it did this, for example, it came to the line here, and it's quite possible maybe do that, because before a major breakout it will coil like it was coiling here, and then maybe do that. But whatever, once it breaks, it's got to really pick up the momentum, and it's going to go so strong, because this previous uptrend was very steep. And you can see that if I was to replicate that in any way, because in order for a new uptrend, it's got to continue, actually make this one longer, continue like that. Okay, so it's got to pick up that basically, and you can see how far we are behind it. So the momentum's really got to pick up. Now if it's going to pick up like that, I have no idea, but my perception is that we are going to fail, and we are more likely to actually go back and revisit the low. Doesn't have to make a new lower low, but probably revisit the low, then find enough momentum to just make it in a one go, not do this kind of a thing, not go make up and then go sideways for nearly a month and then go up. It would simply go up, not obviously in one straight line. It will still do, you know, ups and down. For example, let me just redraw that. It is still going to do something like, you know, this kind of a thing, but certainly not spend a whole month trying to consolidate. You know, you'd expect that kind of thing, and then if you draw a trend channel, you'll find that the trend channel will be, you know, fairly consistent and strong, demonstrating some new real strength. So until I see some kind of a price action like that, I'm not convinced that we are actually in a new uptrend. What we are at the moment is retracing either the leg we dropped from here, which is the high from March 4th of March high, and we came down, we're retracing it, rather deep retracement, it is nearly 61.8% retracement, but you know, nevertheless retracement, or it is retracing this entire bit here, right? Now up till we had this breach, you know, and to some extent it is a second guessing really, because you only interpret what you've got. So once we had this drop, we came down, we made this one, we needed that in order to actually complete this cycle, and what I was expecting is a 5-wave move to the downside. We never had that, but I was hoping that maybe what we had this leg going up, then we were coming down, this one never had a 5-wave move up, so this might be another W or an A, B or an X, and then in this one I was expecting a 5-wave move down. We never had that. So then I began to reason to myself, what this one looks like to my eye is more like a falling wedge, and the falling wedge is a bit more pronounced on the arithmetic scale rather than the log scale. But what basically falling wedge means is that if I was to draw this one like that, okay, like that, then the height of this one is more than what it is here. So in other words, we are contracting, so it's called falling wedges, narrowing down as it comes down. And really speaking, what I was expecting is from this leg somewhere here, I was expecting it for it to do this, because that would have given me a classic, very classic falling wedge, right? And in a falling wedge, the Elliott wave rule says that you need 3 swings in every leg. So for example, this leg coming down had 3 swings, going back up 3 swings, coming back down essentially 3 swings, going back up 3 swings, and I was expecting 3 swings here. So we've already had, like, you know, maybe from here we already had like 1 swing down, retracement, another swing down. That would have finished this complete retracement, and we would have probably bottomed out around about 300. That was my reason for 300 or 320, but instead we had that. So now it doesn't look like a falling wedge anymore. It could still be, because on a log scale it could still be, because this height, if you can look at it, is actually higher than here. So in some deceptive way it may still turn out to be a falling wedge, but at the moment, but then this falling wedge has a momentum or potential for it to go a lot lower, because if you draw this line here, and depending on when this leg get there, we could drop down to anywhere from 280 to probably even, you know, longer. If I was to use this previous as a possible, the only thing is on a log scale I can't quite easily replicate that, you know. But you see, if you was to do that sort of thing, for example, then you know you're talking about maybe about 260 or so. So that's one possibility, and in which case we are still in downtrend. In terms of Elliott wave, what I would think now is that this is kind of a twisted, this cycle down, and let me change the color on that one to green to make it very different now. Okay, so this cycle down is a wave A or a W. Then we need, remember, ABC. So I think what we've got is we got very twisted kind of A, B and C, and Elliott wave would call this one running flat. Running flat meaning that the market is trying to correct properly, and in normal correction what we would see is a leg down, and then we would see A, B and C. That would be the normal correction. Then you have a second leg down, right? So in this case we went up, that's fine, we came down and we actually took out the previous low. Now we are trying to correct, but we don't really have the momentum, even though this looked very appealing, and even though here there was so much excitement in the room, and all the bulls were really salivating about, you know, price going back to the moon again, but in essence this price should have gone up a lot higher before it come down. It's still potential for it to do that, but it might not. See, if this one came down here, something like that, or a little bit lower down, it would still be running flat. Running flat meaning that this low took out the previous low. It should not have, right? Now this is trying to retrace, but it can either take out this previous high or it might not, might stop a little bit short. So potentially it's still running flat. Running flat meaning it's trying to correct properly, like this one here, zigzag, but it doesn't have enough momentum to do that. So it's failing to actually continue moving up and taking out this previous high to produce a proper zigzag. It's failing to do that, so it's called running flat. And if that happens either here or here, doesn't matter where, it will continue to remain running flat, and then the outcome of that would be another leg down. This another leg down, if this is running flat, this another leg down will be so devastating that people will not believe it. A lot of the people will be very humble and will learn a lifetime lesson. And I sincerely hope I'm wrong. So let me put that on the record. I'm sincerely hoping, for the sake of many of those, I'm hoping that I'm wrong. But if I am right, then just consider what the consequence would be. Consequence would be we would at least come back to retest the last low, and maybe we would come back and make a much lower low. And in this leg you will get 5 wave that I've been looking for here, and we never had it. You'd actually get a 5 wave, and that 5 wave would turn out to be like this. Let me just sketch it out quickly, and then I will go into the one final bit why I think we haven't got the low, and then I'll turn it over to you. So for example, I would have this here. So wave 1 down, and again this is based on the guidelines I'm looking at. I have no idea whether it will do this or not, but this is what I'm looking for. Wave 3, wave 4, and wave 5, something like that. Okay, doesn't matter exactly where it finishes, but something that kind of order is what I'll be looking for. I'll be looking for a very dynamic, not this kind of a chopping, overlapping, retracing nearly 100%, 80%, not that sort of thing, but this sort of move, and it will have a clear downtrend that you should be able to define it like so. If I can grab the correct tool. So this one should have a clear trend channel like that. You should be able to draw that like that. You'll get a 5-wave move to the downside, and once you get a 5-wave move to the downside, and wherever it ends, that's your signal for now turning real bullish, whereby the price will then come out, whether it's at 250, 260, or even at 200. It'll come out and approximately retest the previous high, or stop a little short, that's still possible, or go up and make a new high, right? Any of those are possible, because on guideline says that you could have a truncated wave which would stop a bit short of the previous high, or it can go up and make a double top, or it can go and make a new higher high. Any of those 3 outcomes are possible, and at the moment there's no point even talking about that. At the moment what we need to see is what happens here. Are we going to go higher? And that will still not change my view that we are in a bear cycle, because my bear cycle is an entire cycle that completes and we get a new 5-wave move to the upside. Until then we are still just whatever it is some kind of a complete complex congestion. Even if we just move sideways, it will be some kind of a congestion. This can go on for long. It can actually go into a completely new kind of a pattern. It could go into pattern like this, for example, right? So I'm just drawing these lines now just for as an idea. So we might get a triangle like that, like that, for example, still possible, or this triangle can even turn out to be like this. Doesn't matter. And in that case, what it will do is, if I take all these away, what it might then do is something like this. So we've got that, this thing can go up to there, for example, then bounce back down, you know, then go back up like that, and then eventually break for that 5-wave move that I'm expecting. Could do any of that. I have no idea, and there's no way of knowing until we get some price action telling us what. But for the time being, the high odds are that we are going to fail, because we are still potentially in a bearish cycle. If you change it to log scale, you'll see that we haven't actually taken out or breached the proper bear line. So we could fail here, in which case we could come straight, come straight down, and we might still get what we want. We might get a falling wedge pattern finishing. But then this leg, if this is the falling wedge, then just like we've had 3 swings in each of these, this will be 3 swings. So this will actually turn out, I will get a leg down, retracement again, another leg down, something like that. Whether that happens to be here, or you get something like this here, this leg down like that, it doesn't really matter. But we should be expecting a 3 swing, because that would make a proper falling wedge. So all of those things are telling me that so far we haven't got the bottom. And one final bit is this here. Then I think I will be boring you any more than that. You see, if you look at it here, there's one individual in the room, and he was agonizing, and it's really pain to try and demonstrate to me, to say that he and his other Elliott wave analyst have made this one look like 5-wave. And this is what he was trying to say. He was trying to draw this line here and say that that is like a rising wedge pattern. Okay, a rising wedge pattern, which is a very bullish pattern, because it starts from the bottom, meaning it's a leading diagonal. Leading diagonal means that it will, once it finishes, it will retrace, and then it will go on to take out the previous high. Okay, so that's called a leading diagonal. Now, in a sense, we've only come within a vicinity, so we still haven't taken it out, right? But is this a leading diagonal? The leading diagonal itself must have 5 waves in them. So does it have 5 waves? If I look at it, I think this up to here is possibly 1 wave. This is wave 2. Then all of this is 1 cycle. Look at it. This is 1 cycle. Nobody can say that that is actually a 5 waves in there. There is not a chance in the world. That to me is 1 cycle. So whatever it is in there is 1 cycle. So really we've just simply got A, B and C, or W, X and Y. The W, X and Y are used when the wave counts are not very clear, but you know that it's a corrective or a corrective wave. In other words, it doesn't have 5 waves in them. So this one doesn't have 5 waves, because if you look at it, this goes up, small retracement, and then final very tiny little leg up. So it looks like 3 wave up, 3 wave down, and then we've gone up in here. And again, to me, this looks more like 3 wave. And the way I would put this one is a proper wedge is this part here, right? That is a proper wedge, because we had swing up, retracement, and then a final leg up, and that's got a 5 wave. 1, 2, 3, 4 and 5, very clear. Okay, so that means this wedge comes after the rise. It's not from the beginning, comes after the rise. That means that's a terminal pattern. Terminal pattern meaning that is the end of that cycle. That means that is the top. Okay, so then we will retrace, and when we retrace, we could retrace all the way back to here, or in this particular case, we retrace almost somewhere 420 somewhere, and then we try to take out again, and so far it looks like we are failing. So all of those reasons are telling me that we haven't got the top. There is no 5-wave move. When we get a clear 5-wave move up, that would be the beginning of a new cycle wave up. Until then, I would somehow struggle to actually contemplate that we are in a new uptrend. And I've already explained what I mean. New uptrend meaning that it is a cycle which is likely to continue producing higher high and higher lows, with the aim of taking out the previous high or retesting the all-time high. So let me see if there are any other views anybody wishes to promote or outline. or add questions. And any questions, those who are not able to participate directly can actually post their questions in our TV chat room. Then we trading the waves. You can post those questions on there, because on my other PC I have that screen currently open, so I'll be able to see your questions if any of you wish to participate and post a question. So those who are in the room, what do you say? Anybody, any questions or any observations or any counter arguments or proposals?
Dan, I agree with you. It's a great chat. Very great. Thank you very much. I wanted to ask you, what do you think of the last rise up? It didn't look impulsive to me. It looks like more like a double zigzag. And I wanted to see if you had a count of the current rise, the last rise.
The last rise, okay. Now I did try to make an attempt in putting the let me clear all of this here. Okay, so the last rise here, this is on a daily chart, so let me take it down to 4-hour chart. I don't take it down to much more than 4 hour, maybe 1 hour, but it's only for confirmation rather than the main analysis. So when I'm looking at this last rise here, originally, in fact, if you were following my chart, for those of you who had the link, and then one individual annoyed me, so I deleted that chart, because I don't mind individuals asking me questions, and from what my knowledge is, I'm happy to answer. But if somebody tries to poke fun at me in my absence without my permission, then I think that is going a little bit beyond taking the liberty. So I got annoyed with that, so I deleted that particular chart, so nobody can now follow that chart. But in essence, last rise, I'm assuming, just confirm for me that I'm talking correctly. So you're saying last rise from this level, is that right? Which is from 420 level?
Yeah, even more specifically the 460 level, basically
okay.
Right when it was coiling,
okay.
the last point.
So now with the hindsight, I can see when I was looking at it, originally, in fact, it would be even better if I just went down to 1 hour chart. Okay, so previously when I was looking at, when we were looking for breakout, I was obviously biased to the downside, so it's quite possible that I was rather surprised when we broke to the upside, but not necessarily. I shouldn't have been surprised, because when we were coiling in this area here, it's a question of where exactly the coiling started. Did it start here, or did it start further back up? But let's assume it started from here. Then what do we have? There was some kind of a wedge pattern or a triangle pattern, and previously in my actual wave count, what I said was this: we had this one, and in fact, as you will have noticed that I've commented many times, that Bitcoin somehow likes the wedges. You see wedges everywhere. Okay, so here is, I think we had minor wave A, B, and C, and C has 5 waves. It's got wave 1, 2, 3, 4, and 5. And because this is the 5-wave pattern and it's an ending pattern, it doesn't have to have 5 waves within it. In fact, often in this kind of a scenario, you'll have 3 swings. So if you look at it from here, you can see leg up, retracement, leg up. So it's a 3 swing affair everywhere. 3 swing up, 3 swing down, 3 swing up again, 3 swing down again, and 3 swing. So every swing is a 3 swing. So that's an ending diagonal. And in ending diagonal, we then fell out and we made this low. Now when we're coming down, it looks very impulsive. And if you look at it, it looks like 1, 2, 3, 4, and 5. Okay, so that's basically what I was looking for. And in fact, I became so bearish, I said that this is wave 1, this is wave 2, and then we are in a wave 3 cycle. So within a wave 3, we've got 1, 2, and everything was looking right until we made this spike and we went back up this way. So then that particular count was dismissed. So then I was more inclined to say that, okay, what we got here is just like the very first decline we saw on a big cycle on daily chart, is that we had this wave A, wave B, and wave C, or some kind of a W, X, and Y. But basically it's a zigzag. Okay, so zigzag down. So when we are zigzag down, we were now at a zigzag back up. So again, the expectation would be for this to come down, but then we didn't. So now with the hindsight, I think what I have is more likely this scenario here. Let me just draw that in. So we've got something like that here, and that means that we had wave A, wave starting off from here. So we had this as a wave A, from there to here as W or B, and then from there to there as wave C. Okay, now if ABC holds, then what you expect in a wave C is a 5 waves. And if you look at it here, we should have a clear 5 wave, but we do not, because let me make sure this is not to the log scale. Okay, so now I can draw proper trend lines. So if I look at this here, it looks very strong, but it's not a 5 wave. I try to put a 5 waves on them, but it's failing. Okay, because remember the test I was talking about is if I put this test on, right, you see starting off from here, and you can go down to even smaller time scale, but you see all I see looking at that is maybe a very small, some kind of a move up, then coming down, then we had this here, that, and that. Okay, now is that a 5 wave? Maybe 1, 2, 3, 4, and 5. it could still fulfill the guidelines of Elliott waves, in a sense that wave 3 is longer than wave 1 because it's not the shortest, so it's acceptable. And we had quite a dynamic move up. So if that was a 5 wave up, then what is this here? So that to me looks much more like some kind of a triangle. Normally you would not expect a triangle, because if this 5 wave make a wave 1, this should be wave 2, then we should have a wave 3. So if this is wave 2, then in wave 2 you never get a triangle. So again, what I've got is, even if this was 5 wave up, this is wave A, this one is wave B, and this is wave C. So in other words, it's a 3 swings, right? It's not a 5 swing. And particularly so because if this leg here is a complete 5 wave, this is saying that this is not wave 2, so it must be a wave B. And then over here, look at the overlapping. So that overlapping, in my view, is like this here. It is kind of ending diagonal, not very clear, but it's ending diagonal. So again, some kind of a wedge. So what that tells me is that we've had overall, we had one wave up, sideways retracement, and another leg up. So it's ABC. So if that is ABC, then overall what I've got is I've got a larger wave A, larger wave B, and this here is wave C, but it's not a wave C because I must have 5 waves. So overall I would make this one count like this: W, and then this can be wave X, larger W, larger X, and then this one can be wave A, small W. Actually, let me do this one here as a W in bracket. When I put bracket, that means is indicating a higher degree wave. Then this one can be normal W, X, and Y. So if this is Y, then we finish the move, right? So that means that one off. Okay, so right, so we've got like larger W, larger X, then W, X, and Y, and within that Y we've got A, B, and C. Okay, so if that's the case, then that is technically telling me we've finished now. We've finished, and from our previous broader analysis we know that we were up against the trend line on log scale, right, which many are still debating whether we are out or in. Based on the point and figure chart, you saw that we are not out of that on point and figure chart. So on this chart we are still within that bearish cycle, and I don't know if that answers your question.
No, that's great. I got the same thing.
Yeah.
So I just wanted
basically,
to make sure.
yeah.
Also, I had another question for you while I have you here.
Yeah.
I'm kind of get confused sometimes with your W's and X's. Now, are they just a way of showing a double zigzag or a triple zigzag?
Yeah. What it is a normal zigzag. So, for example, if you see wave A up, wave B down, and wave C up, that normally is a normal zigzag. And in that normal zigzag, wave A doesn't have to have 5 waves, but ideally wave A has a 5 wave, wave B. So if I was to if I was to show that on a make that a different color. Okay, so if I was to show that here, we could have, say, for example, wave 1 up, 2 down, 3 up, 4 down, and 5. For example, we finish there, then we would get A, B, and C. Three move down. Then again we would have 5 waves. So if this is ABC, then wave C must have a 5 wave. That's the general guideline. Is that wave C cannot have just a zigzag, right? So if we have 5 wave to the upside on a wave C, and in a wave A, it's possible that we could get zigzag. That's okay. But in a wave C, we must have 5 waves. So if you have a 5 wave in a wave C, then you can label this one as A, B, and C. But if you don't have 5 wave in a leg C, then it means it's not a typical ABC zigzag. So then what they say is that it's best to then put W and then this as X and then this one as a Y, because in WXY it's a zigzag and it can be basically any pattern as long as it's some kind of a zigzag. You could even have zigzag, you could have like a sideway, you know, but they're non-specific. You could even have in between, you might get 3 waves, like here you might get wave A, then you might get like a triangle and then another leg up. So in that case this would be W, X and Y, or A, B and C, because the triangle takes place either in a position of wave B, wave X or wave 4. So if this is a triangle, then in this leg we must see 5 waves, in which case we can say A, B and C. But if this one doesn't have 5 waves and it just happen to have, or it's not 5 wave clear, it's like a, you know, like this kind of very choppy overlapping, then it's some kind of a complex zigzag. So then you would be better off saying W, X and Y.
Okay, great. Thanks a lot,
help?
Dan. Okay, yeah, it's great. Thank you very much.
Thank you.
Yeah, it's great. Thank you very much.
Yeah. So anybody else? So let me ask you a question then. I suppose most of you who are currently attending and have previously viewed my videos, are you just Bitcoin traders, or do you trade any other markets or even look at any other markets? Is the Bitcoin only instrument that you actually trade? Or many of you just started with a Bitcoin? Okay.
Okay, I'm online. Nice. Yeah, I just started with Bitcoin. Can everybody hear me well, or is there
Yes.
some echo or something?
Yeah, no, here you fine.
Perfect. I entered the trading via Bitcoin, and the trading itself inspires me because
Okay.
I see some. I'm a designer, and the Fibonacci system attracted me very much. But it's also possible to use it for trading because it's a natural form of growth. And like this, I came to trading, and the more I learn about it, the more interesting I find it, and I want to expand my knowledge for another market.
Okay.
But for now, I try to get a grip on Bitcoin, which is
Right.
pretty complicated, I think.
Yeah. The reason why I ask this is because a lot of these markets have a personality. And personality is not because it's a Bitcoin. Personality is who's actually trading the particular instrument. And my crude view would be is because of the very volatile nature of the Bitcoin, the people who trade are basically Wild West traders. Like in America, Wild West, people go around hanging gun on the hip, and they're quite trigger happy, So people are taking extreme risk, and they are, many of them, not very experienced traders or experienced chartists, and basically letting their emotions run, and that's why you get this kind of spikes. You don't see many instruments with this kind of spikes. So Bitcoin has a particular personality, and a personality it is actually displaying on the chart is the personality of the traders. And the traders are jumpy, very jumpy, and afraid of missing the move, or entering in a wrong, and then getting burnt, and then holding, and suddenly they let it go. So that's why you get these big spikes. And if you continue to just look at Bitcoin, maybe you could become specialist in Bitcoin charts, or you might want to look at some other instruments because they're not as volatile, and from the perspective of basic chart analysis, it might actually help. That's the reason why I was asking.
Yeah, this was also my experience, also in my own behavior.
Yeah.
My first attempts were horrible because I wasn't really able to foresee anything. I had no idea what would go to happen, and so I dropped when the price was down, and I was buying when the price was on top. So the basic mistakes. And I think this is something in Bitcoin that the big fishes, or whatever name you want to give them, really exploit to the max.
Yes.
And what makes me also curious is it's really hard to foresee when something is going to happen. Well, maybe this is because of my lack of knowledge.
Yeah.
But sometimes I have no idea why this is actually going to happen. And they push the price, just like what we saw now, higher and higher and higher and higher. And everyone in the chat is screaming, why so high, why so high, stop, stop, stop. And no one knows what's going on. And everyone at certain points, key levels is selling, and then the next buying sets in again. And so this is also a reason why they push up the market, because the people that sold buy in again, panic buying, and so it goes higher and higher and higher. And yeah, I am not sure if other markets behave a little bit more civilized. I don't know, because at the end of the day, I think everything is manipulated in a certain way, but maybe not to that extent in Bitcoin, where you have so many people that are greedy for the luck of the early adopters and now think they can get rich by buying to bitcoins, and read those stupid posts on Twitter where someone no one knows says Bitcoin will be $1 million worth. And I think this is something the market makers exploit to the max, and they don't care if the price goes up or down because they make so much money in between. This is my point of view on Bitcoin, and might be interesting to see how other markets behave.
Yeah, and you know, we made a reference to rising and falling wedges. And you see so many rising and falling wedges in different time frames and in different swings, whether it's a bullish swing or a when I say bullish, I mean like whether it's retracement to the upside or a chart moving downward. You're seeing lots of these rising wedges and falling wedges, and you know that's why Bitcoin appear to like wedges. And I think it's probably because the way people are engaging with the market, and if those people's expressions or emotions is currently encapsulated by the individual price bars. So you know, you find that this chart, when you look at it, has a particular personality which you won't find in other instruments, unless you know you're looking at a similar cryptocurrency like Litecoin and some other kind of coins. They will all display very, very similar characteristic, I think. Now there was a question somebody was saying or asking, if I was wrong, where would one buy if you didn't want to miss out the next major bull market? Okay, now whilst I don't have a sort of a guaranteed way of saying that, first of all, remember what I'm saying about Elliott waves, and because that is forming my base, not necessarily the fundamental. I don't really care about fundamental, because I think that in terms of these individual swings, fundamental really have no bearing. I will not stop stressing that. I don't care how people think that they have a handle on fundamental. Maybe they do, but you know, fundamental don't change from hour to hour. So on that principle, fundamental really has no place. The fundamental will have a place if we start from there and we finish up over here and the whole cycle is finished, and then some fundamental development could actually then begin to kick in and the new phase would come in. That's possible, but not within it. And within it, as far as the Elliott wave is concerned, whatever this is, the last leg must have 5 waves. If I see the last leg with a clear 5 wave, then I know the cycle is over. And until I see a 5 wave in there, I'll have to continue looking for possible another low. It doesn't have to have another low. It can simply come and retest this one and end that, you know. But in that process, I must see 5 waves. Okay, even if I get a truncated 5 wave meaning you stop short of the last low here. So if this last low here was at 340, for example, this next 5 wave down here could finish up at 350 or 360. But I need to see clear 5 wave, not choppy, overlapping, or 3 swing, like say 3 swing up, 3 swing down. Every swing you look at is 3 swing up, 3 swing down. As if I continue seeing that, then they are part of correction. Whatever they're correcting one. You know, this 3 swing up was correcting that leg down. This 3 swing down was correcting this leg. So now we've gone 3 swing up, so it was correcting this leg. So maybe we will fail here, make a double top. If we get another 3 swing down, then that 3 swing down will effectively be correcting in this entire leg. You know, so we could come back and retest that, or maybe make a slightly higher low. And in that way, it's very impossible to really know what pattern is going to form. But what I'm looking for is a signature of 5 wave down. Once I've got signature of 5 wave, then I'm all bullish. I will then simply expect higher high and higher low. Retracements will be relatively shallow, and the up leg will be relatively strong, and that will continue to create higher high and higher low. And until then, we are in some sort of a correction form, not very clear at this moment. It might be a falling wedge. I still think it will be, but if it's not a falling wedge, then we've got a running flat. A running flat, as I explained, is where we should have a zigzag A, B and C up. We have failed to do that. We've got wave A, we've got wave B, which actually broke below here, and now wave C is struggling to make up that. So and in that case it won't be A, B and C, it will be wave, larger wave A, for example. And then we've got this as a possible W, this as X, and this as Y, and in which case it becomes a wave B, right? So we've got wave A down, we got W, X and Y as zigzag, so that becomes a B, and now we should be looking for wave C with a 5 leg down. If this doesn't happen here, then this might still continue up, and wave B might actually form over here. Fine. If I want to get long, then I have to have a strategy that if, for example, I find that this trend line on here has been breached, then I have to conclude that maybe we are going to go higher up. It doesn't mean higher up meaning a new higher high, but we're going to go higher up. So if you go higher up, then you would probably, what you need to do then, make sure you are not caught on the wrong side, and you have to, in life you have to be contented. You cannot have a view that you want 100% of everything, because you'll be in for a lot of disappointment, a lot of trouble. If you gathered out of the 100%, you manage to get good 60-70%, you should be content, and you should not decry the fact that you lost the 15% potential or 10% potential, because if you do that, you'll be in trouble in trading. So if this move goes up and you think it's broken out, you're going to go long, what happens if this one comes straight crashing down? What happens? You're stuck. You won't even have a time to think. If you had to stop, you'd be out and you'd be wondering and you'd be baffled what happened. Or you could have a situation where it goes up, makes a small retracement, gives you the evidence that there is no real strength in selling, then maybe you'll be looking to buy going long. Wherever you go, it doesn't matter where, you'll be looking to buy long. And in that particular case, we'll have to ask your question is what is your account size? And then from the account size, if you want to stay in the game long enough, you can't go heavy in, because if you're wrong and you take first or second time heavy losses, your account will be decimated. That means you will really, emotionally you'll be shipwrecked, your confidence would go, and you will find it difficult to build your account up. So it's better in that case to trade small and gradually build up. Take a little bit longer, but you should definitely have better results longer term. So having that said, you might say, okay, I don't want to risk more than 2 or 3%, which as far as I'm concerned, really anything over 3% to an absolute maximum 5% is taking extreme risk. So if you're really good and you're able to swing in and out and capture on all the spikes, well then fine, go for a higher percentage. But otherwise, anything more than 5%, you're really asking for trouble. But I would say probably up to 2.5% is manageable, but ideally below 2 is better. So if you say 2%, so say assuming you have, I don't know what sort of account size you lots have. So I see some of them trading really big, maybe you have a large account, but I say let's take a modest account of say $5,000. So on a $5,000, 2% is really $100. Is that right? Yeah, $100. So $100 mean each Bitcoin is nearly $500. So you can't afford to buy a Bitcoin, because if suddenly it fell by $50, you'll have to get out. You'll be losing 10% of that particular trade on the money that you put in. So you'll have to see where the stop going to be. Now if the stop is going to be nearly $60-70 down, because there's no point putting a stop here just because you don't want to lose more, because that way is a sure way of getting your stopped out. But if you have a structure behind you, then you say, for example, on this one, real structure is there. So your stop has to be a bit further away from the absolute low, which if it is at 420, you'll have to have your stop maybe somewhere about 416 or somewhere around there. And then Bitcoin being volatile means that ideally you need to have a stop a bit further away. So somewhere around say 410 or 412 or 413, somewhere in that area. So that means from there to here is nearly $100. So if you had $100 stop and you went in and you were looking to spend whatever amount, but you did not want to risk more than 2%. So 2% we said over 5,000 is $100. So $100, this is $100, right? That means if you lose $100, you've lost 2% of the capital. So what kind of an account position can you put on? If you went in with say 1 Bitcoin, then effectively the entire Bitcoin you'll have to give away literally, isn't it? Will you? No, $500 and you lose 100. Okay, so you lose 25% of your Bitcoin and you'll be out. If you went in with a 2 Bitcoin, then you will be losing $200. So you'll be taking really big risk. So in other words, what I'm trying to say is that you have to trade for a $5,000, you have to trade 1 Bitcoin and smaller than 1 Bitcoin, like half a Bitcoin. You know, if you have half a Bitcoin, you can afford to have $100 stop, because in half Bitcoin, if you lose $100 on half a Bitcoin, then you know effectively you're looking for halving your value, and this $100 will mean that you'll manage. You know, so smaller size you're able to, depending on how convincing it is and how far the stop is going to be, will bear in, you know, what sort of position size you put on to remain within your 2% or so of risk of your overall capital. Then you'll be able to get some trades. You might be able to trade and say get 2, 3, 4, 5 trades wrong in a go, but your overall loss will still be somewhere about 10% of the capital, and that's recoverable. But anything bigger than that is wrong. So in answer to the question to this individual, where would you want to go long if you think you're going to miss the boat? If you think you're going to miss the boat when it's going up like this, it's a risk. Sometimes you catch it and it could come crashing down, or it could be just continue higher. So there's no way of knowing it, so there's no way of knowing which will work. But if you're looking to enter in on a logical basis, not simply by emotion, then I would expect this trend line to break. I'd expect some kind of a pullback, a reasonable pullback, and give me a structure. Then I could go behind the structure. So if that structure happens to be over here and the price begins to go up, or my you know, one of these candlestick, for example, on a smaller time scale like 1 hour gave me a big bullish kind of a thing, and some other things indicated maybe trend line support, all that kind of thing, or maybe horizontally, you know, say here if I put a horizontal, that could be the other thing. See, something like this. So here we know we had a resistance, we break out, and say if in breaking out we went up and then we came back to something like that. Okay, then you begin to see another move beginning to go up, and there's a possible trend, because you know we might be able to have, then in addition, doesn't always, but in addition you might be able to have possible trend line like this. That trend line could be based on like that. See, that high, that high. So when it comes down, you would expect a support to be in that area. So if the price came and, you know, sort of formed a low and begin to go up, you might say, well, okay, now I'm prepared to go long. I'm not taking $100 risk, but over here I might have only $20 or $30 or a $40 risk, or whatever it happens to be. So at that stage you could go long, and you might be able to then trade maybe 1 Bitcoin or 1.5 Bitcoin, because your stop is not so far away, right? That way is possible. Money management is completely entirely different than actually charting. Charting is one aspect, and money management is completely different aspect. And what makes people succeed is not so much the chart, although it's important, it's a money management. Because there was somebody who was telling me that if you just did just a pure random game where you make sure you enter blindly, you really enter blindly, but every time you enter you have a fixed stop loss, and your fixed stop loss, it takes you out 1% loss, you're out, doesn't matter what. But when you're right, you go for 3%, 4%, 5%, and you take your profit. You know, some people say if you got it right and you're riding the trend, ride it all the way. You know, well, that's good, but then when do you know it's going to end? So if you're entering blindly and you just simply had a mechanical robot that every time it entered it made a 1% stop loss and it's out, and if it's taken 3% to 4% profit and takes a profit, and it just keep entering all day long like that, you can be sure that that robot will make money. Now I don't have wherewithal or aptitude to actually test that mathematically, but you know, some of you might be able to actually run a program and see how it would work. But if you were able to code a program, a robot like that, then you would expect that robot to make money. The reason why is because, you know, he can afford to get 2-3 wrong trades and still break even. That's the reason why. So longer term, he would consistently keep doing that. Long term, he would make money. So it's not so much the charting, not so much reading the fundamentals and getting all of that, you know, in your, is there a news event and getting all paranoid about that, but it's actually having money management is really, really important. But I would say that if you then combine money management with good charting technique, then, you know, you're really into, I wouldn't say winning, but you're certainly into a you know, firmer ground to consistently make money slowly over long term. That's what I would say. So if I'm looking for going long, that's what I would look for going long. But then I would say to myself, where's the target? That's the other thing you got to look for before you enter the trade. Is if, for example, I'm planning for this trade, but suddenly there happens to be over here, you know, a strong moment, strong resistance because of this previous structure here, either at 650 or 700, and I'm entering long round here at like 600 or so, or somewhere in that kind of area, then potential is $100. So I may have to start scaling off or start taking profit before it gets there, because how do I know that when it gets there that it's not going to turn back? Because, you know, when this thing turn back in blink of an eye, you 1 minute you're making $30-40 profit, next minute is taking it all out. So, you know, it's a nerve-wracking. Or if it's done gradually, if it's not shot up, if it's done gradually, then you know, you'll have an opportunity of maybe then bringing your break-even stop, and then, you know, gradually locking on profit and trying to ride the trend if you can ride it. Maybe take partial position and then ride the partial, or some combination of that. But I wouldn't just enter blindly. And from all the things that you hear me saying, I am of the sort that I want to catch a bigger trend. If I was looking for bigger trend, then my idea would be this. Now, I don't care if I'm wrong. I would be looking for going short right now, because I'm back onto the trend line. Potentially my horizontal line tells me previously we had very strong support, tested again, tested again, tested again, and we are now bumping back into it from underneath as a potential resistance, and my overall trend is still to the downside. So I would be looking for long here, looking for short here. If I now go down to a smaller time scale, maybe something like 1 hour, I can see what's happening in 1 hour. Okay, well, on 1 hour,
looks like it may be rolling over just now, Dan. Sorry to interrupt, but
Sorry?
I want you to take. I say it looks like it may be rolling over just now.
yeah, it is. It
I'd like
is.
you to analyze the near term as well. The
Yeah,
short
the
term.
first one looks like leg one down, probably with a five waves in them.
So what are your thoughts for the next 24? I know you're a term guy, but you could just comment
Yeah,
on
see,
the
okay,
near
so
term.
it's not a 5-wave. Again, you see it's got a 3-wave swing. It's got ABC down, it retraced, and is now coming back down. So at the moment, maybe perhaps if you haven't entered, and if you're entering short, then this area might be a wrong area to enter. But ideally, you know, you can see you had a 3-wave down, we had a retracement back up, and it really failed to make any further. So you could have gone short. Potentially your stop would have been just above this structure here, or maybe over here. So even if you went short now, your potential for this one is to go and drop down back to something like drop down back to somewhere about 480, 470, somewhere there. So in that sense, it's worth considering going short. But that's what I would be looking for, short. I wouldn't be looking for going long here. And I know this was very tempting and very exciting, but to me it lacks what I need. So I'm happy to observe it from a sideline, and my view is that this short won't just come down to here. I think it's going to have potential of breaking all the way back down. It has a potential. Might not do it in one go.
Okay, good.
Yeah, it might simply come down to this baseline here, then maybe do a bounce there, and if it did this, and fail, I'll be all over it, right? Because then I have a structure to give me a potential stop loss, and I know that this coming back up here will not be so dynamic. So based on that, I can short it, and I wouldn't be looking for taking profit here, but I'll be looking to bring it to break even fairly quickly, so that if in the end turn back, I won't get into a loss. But otherwise, I'll be looking for retest of the low. And when you're trading these, and you hear so much news, how do you know which way this news is going to affect what? I mean, really, how can anybody say that, oh, there was some positive news and this is broken out? And there's been a lot of positive news, but during the positive news, this market was sideways. I don't know what the news are, but a lot of the people were saying there was positive news, all positive, everything is positive. So during that positive news, we weren't actually making bullish move, we were trading here in sideways. So why? That's where I think that sometimes technicals, what's happening here? Technicals and actual fundamental don't always necessarily go together. There is disconnect most often. One does not equate the other. That's why the fundamentals sometimes I think have a disadvantage. And there are some people who try to be very, very clever and actually try and, I think, put themselves to the point where they say, oh, this charting won't work, your indicators don't work, it's a fundamental. I always look at the fundamental and sentiment, and they come onto this chart and they say, I observe the sentiment of the people and just do my trade by them. But then when are they looking at sentiment of the people? Why are they not showing on the chart that because of this pattern, this is what the sentiment is? So now I'm seeing the sentiment, I'm expecting price to go here. You never see them show that. But they're always very clever and very like a backseat driver in the car, where they're sitting in the passenger seat and they think they're able to drive better than the driver. So they're always giving this kind of commentary, and I think, I wonder what they do and what their intentions are, and if they are just simply observing sentiment, why are they trying to interact with the people and trying to share their view, and always doing it with hindsight, because it's never before the move begins and they say, look, the sentiment is like this, now we're going to see the move go here. Well, why do they never do that? Why is it always they're saying this move's gone, I knew it's going to happen, I'm always wrong rather. People looking at charts are always wrong, but I look at the sentiments were telling me this is going to go to the moon. So that's it. But I wouldn't personally, the more people talk about sentiment, fundamentals to me, the more I shut my eyes and ears to fundamental, because I really, on a short-term time scale like this one, fundamental really have no place at all, really no place. If you want fundamental, don't look at anything less than a daily chart, then you look at fundamental, and fundamental won't change from day to day. Fundamental will change over 2-3 months, 5-6 months, over 12 months. Fundamental will change, not from day to day and week to week. Fundamental don't change. So you should not be looking for anything shorter than a daily chart if you're a fundamental trader. Anybody else doing anything different is, I think, actually showing the ignorance personally.
Oh wow.
That's my blunt view, is they're showing the ignorance. They're trying to show how clever they are, but in doing that, they're actually showing how ignorant they are. Anyway, any other comments or questions?
Well, I was going to ask you if you thought it may be a balance of both, but technicals and fundamentals will be pretty much answered the question. The only other question I had is if you could entertain just looking at the Hubi on the short term, and see if you see anything else, or if it kind of lines up the Hubi.
Yeah, you want to share the screen?
In the very short term.
Yeah.
Yeah, I can pull it here. So.
Okay.
Yeah, look at that.
Yeah.
See how it really rounded over there?
Yeah.
We'll go to the hour. It's definitely going to come down and.
Yeah. Yeah, I mean, you could get a short-term support on your Ichimoku cloud there, but I think potential is a bearish. And look, even on your volume, you see that volume spike, much higher volume on that earlier leg, on that leg, compared with the final leg. You know, so I think selling pressure is going to take over. Yeah, exactly. Selling pressure is going to take over, I think, and everybody else who's expecting this to now break and go up, and will have to reconsider. I think. Bullish moves are not made of three swing. That's the fundamental part of it. No matter how much they argue, any bullish swings that has a potential of making higher high and higher lows cannot stop with three swings, because you might have higher high but not higher low in three swings.
No, it would be horrible if it bounced off this 23.6.
Yeah, I mean, if somebody short on that one and they put a stop on that secondary high, it's an excellent trade.
Now we're getting the Willie. It's getting.
Yeah, and
you don't like the Willie? What do you think about the Willie?
About the Willie, I don't look at the Willie. I think these are all overhyped indicators. Personally, there are people who try and make it appear as very clever by having some kind of a special coded indicators, but in essence, first of all, price action, everybody says, is a king. So price action should have the prominence. Indicators are only there to help you confirm. So what is it confirming? Indicator should not be telling you something. Indicator should be confirming your physical analysis of a price action. And the physical analysis of price action is a combination of things like trend lines, or channel lines, fib retracements, structure high, structure low, and the rate of momentum, which you can physically see, because on that particular chart that you are looking at now, after that long sideways, see, we had a very steep breakup, so we know that that particular momentum was almost like vertical. Now compared with that, the second leg after a short pause is not as steep. That means the momentum must be less on that one, right? So we don't need any indicators for that. You don't need Willie, you don't need Ruby, you don't need anything. You should be able to know physically that there's a less momentum on a second leg than it is on a first leg. That means potentially this market is going to turn over. Where is it going to turn over?
Relative strength, the RSI, shouldn't that show in the RSI?
Yeah, even on RSI, you'll probably see either double top or a divergence on RSI.
Yeah, we do see a double top.
Yeah,
right there.
Yeah, so so all these things will tell you. Now the Willie, I don't know exactly what the secret coding is behind the Willie, because I think, is it a CR investor who's come up with a Willie? I think he seemed to be promoting it, so I think maybe it's his invention, but it's based on a William percent R, so right. I gather, and the William percent R is very similar to the stochastic, just a small the variation or a derivative of stochastic. And stochastic, as far as I'm concerned, is very sensitive. So if you compare stochastic with RSI, RSI is a lot more stable, and stochastic whip up and down much more quickly. If you
I thought the Williams would is more responsive. I thought it was the other way around.
Sorry?
I thought the Williams percent R was a little more responsive, more dynamic than the RSI.
Correct, I agree. William percent R and stochastic are very similar, but the RSI is a lot more gentler, a lot more dampened down, and I normally use RSI. I use RSI predominantly, and that is simply to help me gauge momentum when the momentum by physical price action is not so clear, and particularly to see divergences. That's another reason why I look for RSI. And for a stronger persistent trend, I use MACD. And I use proper MACD, not the histogram MACD. The proper MACD, what it will do is on a big swing, MACD is not contained by the upper and lower limit. Like the RSI or Williams percent R or stochastics, they're all limited by the lowest it can go is 0 and the highest it can go is 100. Can't do any more than that. So MACD is a free floating indicator. So it can actually, in a very persistent bullish or a bearish environment, it can go, you know, strongly up or it can come strongly down, and it can help you sometimes actually to track the momentum and not interpret that the Williams percent R or a Willie is you know, they get, oh, it's absolutely silly at the top, overboard. But then you might find that it's actually pegged at the top, or is what they call embedded at the top, mean that the trend is very persistent, and the Willie then doesn't help you other than simply confirm that it's actually pegged at the top. It doesn't seem to have much opportunity of coming down very far, but is stuck at the top. MACD will actually show you better that it's actually trending, and when you begin to see divergences, MACD will show you a better divergence than your Willie or stochastic will. RSI will be helpful, but RSI, I would combine RSI with the MACD if you're ever using an indicator, and anything else than that I think is just a variation of theme really, and it depends on what your preferences are and what you feel comfortable using.
Mm-hmm. All right.
There was another thought that I had, somebody showed, and sometimes I think what people try to do is, in order to support their view or convince themselves of what they wish to see and what they wish to happen, they actually force lot of technical analysis. They'll come with very convincing ideas. So let me just go on to say 4-hour chart, see if I can illustrate this.
Okay, while you do that, I just want to say, what if this is a massive cup and handle that we're about to make?
Yeah, that's what I was going to go on. You go ahead and show me what you had on the cup and handle.
There it is.
Right. Okay.
That could be dangerous, man. And then from there, we just, you know.
Okay.
Where's my rocket? There should be a rocket here, but anyways. Do you like that, Dan?
Yeah. Yeah, I see that. Now, I would say one thing. Normally, you interpret cup and handle from this chart as a continuation pattern. Is that correct?
Yeah.
Okay, so when you want to see a continuation pattern, that means there must be a persistent or noticeable trend prior to that pattern. Now, is it there? So that's a test. If that is a cup and handle pattern, and it is a cup and handle pattern that is continuation pattern, then the question arises, what is it continuing? So it's continuing a trend. So you have to look at the previous trend and see if there is justifiable trend leading up into cup and handle pattern. What would be your answer?
You may have to help me out with that one, but I mean, I just see that this went
No,
down.
I see exactly what you're doing. Yep. I understand that, but you know, the cup and handle on this particular chart anyway, cup and handle would be very bullish, and if it is very bullish, a cup and handle suggests continuation of trend. So question we ask then is, what is it continuing? It's continuing a trend. So what's the trend? What was the trend leading up into that cup and handle? And the trend has to be proportional. In other words, you know, say for example, when people say head and shoulder, what you don't want is a tiny little bit head and such a massive gorilla shoulders that it doesn't look proportionate. So in that particular chart, if you look at with the cup is bigger than the prior trend. Would you agree?
Okay, yeah, let me just zoom out a little bit more.
Yeah. and just
And I'll
lift
probably,
and just not stretch it out. Okay. Now you see the cup. It's a massive cup. You agree?
yeah.
Right. And compared with that massive cup, look at the trend previous to that. Would you really say it's a proportionate?
No.
It doesn't look proportionate. To an eye, it doesn't look proportionate. And the second thing
Agree.
is, if you look at the handle, you see, if you look at the cup, how long did the cup take? From the
How
high of
long?
one
Like a whole
side,
month.
whole month. Now, in comparison to the whole month, would you expect handle to complete within a day or two, or within a week?
Yeah.
You know, the handle would have to be proportionate. That means, you know, if the cup took a month, you'd at least expect a week to week and a half for a handle.
Yep. So we could do something similar to this one where we kind of go up like that and then roll over.
Yeah, that is quite possible. Um,
All right.
okay. Well, the other thing you might actually see on that, uh, besides sort of reading too much into it, is simply a double top in that area.
Okay. Yeah, right here.
Yeah, almost
It,
double top.
almost.
Yeah,
I would have liked it to get a double top.
yeah. And the
But
beauty of that double top is, if you look at the RSI, you'll see what we call a hidden negative divergence, meaning the price is actually making lower highs, and the RSI is making higher highs on a larger time frame, like I think 4 hour or yeah, 4 hour chart.
did a similar thing not happen back here though, and the RSI reached a higher level, much higher,
Where about?
when it was really pumping.
Yeah, yeah. RSI went really high, but the price didn't actually make it to the previous high.
Yeah, and it just rode there for like a whole month
Yeah,
at 95, and we're not even but at 74.
yeah.
So
So
who knows though, right? Who knows?
no, absolutely right, absolutely right. I mean, you know, there's no guaranteed way, and that this thing can be so volatile. It could actually rock up, and that's what I was saying. That is potential for it to go up, and it could go all the way to 700, 800, even 900, but it would still be within a larger bullish, I mean, a larger bearish cycle.
Okay.
Yeah. So
What is that candle called? The shooting star?
that candle, well, that one is like a shooting star. They call it shooting star candle.
Yep.
Yeah, so, you know, or high wave doji. But it's happening at the top is a potentially reversal pattern. But it needs confirmation. If it's a reversal pattern, it needs confirmation, and that confirmation could only come from subsequent candle. And whilst you're adjusting that chart, there was one colleague of ours. He was saying that he posted a weekly chart, and on a weekly chart he's got some indicators in there. I think possibly VPCI. I don't know what the VPCI is, but he was suggesting that that particular indicator is now at a very lower end, where previously, in fact, it's actually lower than the previous ones, where previously market sort of went sideways a little bit and then suddenly rocketed up. So it could do the same again. He's suggesting that it could do the same again. He's referring to sort of sideways action back in September 2013. Then market shot up, and then again in May 2013 to September, and then market shot up. And he's saying that we are in the same kind of environment, same thing would happen, and we would shoot up. He could be right, but in a sense, the very fact that his particular indicators actually produce a new low suggests that it's because of the weak momentum. Not a weak momentum, when I say it's a strong momentum to the downside, and it's not exactly hidden divergence. Hidden divergence might still play out, but at the moment it's still got a strong momentum to the downside, even though we've had quite a bit of a bounce. So we might actually bounce and maybe then come back down again and create a divergence, meaning the price will make a lower low, but the indicator will then produce a higher low. Yeah.
Yep.
Mm-hmm.
All right.
Yeah, it's possible. That one is 2-hour chart, right? Yeah, it's possible. We'll have to see. That's why I was saying that it could come down, retrace back to on the other one 520 or so, not 520, 480, 470 somewhere, and then maybe begin to make another leg up. But really, if it breaks down below 470, then we're back to the strong downtrend, I reckon. Okay, so how are we doing?
I think they're asleep.
Still awake.
So hopefully you've understood a bit behind my reasoning why I still seem to persist on bearish side rather than becoming all bullish, and why sometimes the fundamental, I think, are not that relevant when you start looking at intraday charts. Okay.
Yeah, it was really great.
Well, I don't know how long we've gone on. I think quite a while now. So
yeah, it was really great.
yeah, well, thank you very much. If there's nothing else, then we could bring this to an end now. And anything else that come up, we can probably look at it in future sessions. Okay, so I take that up. We're okay. Yeah, thanks. Thank you. And you're always welcome to post any questions on TV chat or PM messages. So if there's anything burning issue or something, then we can look at that in between. But I'm trying to set up a session probably tomorrow this will be based on trading other markets, not just the Bitcoin, because I think all the Bitcoiners should at least begin to monitor other markets. So when you get extensive sideways move, they're not stuck for possible trading opportunities, or begin to take needless risk because they're absolutely stuck and they need to make some money, so they have to try and trade, and then trading opportunities are not there, so the risk gets, you know, out of proportion. You know, if you essentially being forced to trade off, or you force a trade on a situation where there is really no trade. So you should look at the market, and in particular, even if it was to supplement the Bitcoin trading, so you could continue to trade Bitcoin, but longer term you could have other trades working for you, where you don't need to monitor the charts on an ongoing basis intraday, but you take much longer term view on a particular instrument to see where it's going to go to, and then use different methods of trading that. So that's what's going to be the subject of tomorrow. I haven't actually set the hangout out yet for tomorrow, but I'll be doing that, and then in that one we'll be going through, you know, at least one particular market, which is gold market, where the gold is in larger cycle and what opportunity it presents, and then how it could be traded without taking massive risk. If you're right, then potentially the rewards could be very interesting, and if you understand that concept, then you might be willing to consider other markets either as alternative or as supplementing your main Bitcoin trading activity. So Bitcoin could be one where you trade intraday, and other markets you can trade using larger time charts for much larger movements in the market, and only monitoring them, you know, maybe once a day or a couple of times a week initially, and those trades could last you some time for maybe, you know, 5-6 months, sometime even longer, and very rewarding without taking huge amount of risk. So even a modest capital could be quite effective in trading this market and growing them by many multiples over the course of maybe a year or so. So that will be the subject of the next one. So keep a lookout for that, and then hopefully you'll join me then.
Yeah, of course. It sounds great. Will you post some sort of timing in your personal chat on TV?
Yeah, what I'll be doing is I'll be posting, I'll be publishing a chart of a gold, and in there will be a link. Also on my homepage there will be a link for the live event. So, you know, keep a lookout for that, and then you'll be able to join me. I think tomorrow, if it's going to be tomorrow, it will be my London time, possibly in the evening, maybe like 6 o'clock or so London time.
Okay. Thank you.
Okay. So if you're all done, then I'll bring this to an end. CoinTrader, I'm located in London, just outside London, in fact. If you know the area at all, it's called Wembley Stadium, where some cup finals and some other football matches and some other major events take place. So I'm just outside that, in a place near Wembley, just outside London. So I hope that answers that question. Okay, great. Well, let's bring this to an end now. Otherwise, it may continue indefinitely, and then we lose out of material, and we rather get very boring.
Okay. Thank you very much for your time.
Thank you.